What's up, guys? It is Wednesday, September 21st. It's 7:12 a.m. and this is the newsletter. So first we're going to dive into Algo is actually having a scheduled mainnet upgrade today. So now they're going to be able to do 6,000 transactions per second in less than 4 seconds. So less than 4 seconds for the settlement to happen. So that's huge as far as Algo goes, and a network upgrade. That's a hefty amount of transactions per second, extremely fast. It's carbon neutral, ISO 20022 compliant. It hits all the bells and whistles of a good coin. So then let's go to the next one here. So then the next article here is Bitcoin versus quantum computers. U.S. government says post-quantum world is getting closer. CISA warns contemporary encryption could break. So according to the U.S. Cybersecurity and Infrastructure Security Agency, while quantum computers are incapable of breaking public key encryption, algorithms, public and private entities need to prepare for the future for threats against cryptography that is not quantum resistant. So quantum resistant is definitely the future as far as blockchain goes, because if we have quantum computers that can hack into these encrypted blockchain systems, then they're toast. So anything that's being developed right now that's gonna stay around in the future has definitely needs to be thinking of how they're gonna make their blockchain quantum resistant. It's definitely not anything that's like immediate of importance, but it's definitely something to keep in mind for the future. So let's keep going. So central bank digital currency equals totalitarianism. The U.S. government is considering implementing a financial revolution that would give the state total power over buying and selling. So this is a whole kind of article about how the CBDCs aren't good for human freedom. So it's talking about how the mark of the beast. So about the mark of the beast, I recall today that evangelicals, I read it in 1979-80, were talking about literal marks on one's forehead or hand, or maybe microchips. So I don't know if you guys remember, but there was that video of the lady saying that the U.S. Navy is working with a Danish company to create a microchip that's implantable in the human body that can operate or interoperate with Ripple. So I think it's called BiChip. Yeah, so XRP, Ripple, BiChip, microchip. And it's kind of spooky how Ripple is like the top CBDC kind of platform. And then you have that microchip thing, and then you have the mark of the beast thing right there as well too. Crazy coincidence. But we have this right here, why the price of XRP is rising today. And it said it's about the SEC sued Ripple Labs for not registering. So they're basically saying because of the lawsuit going into summary judgment. If XRP wins the case, it will certainly remove the risk of further legal action against the cryptocurrency and Ripple Labs. It will also be a win for the entire crypto industry because it does not set a precedent to treat digital assets as securities. I wonder if this will be the catalyst for the whole crypto market rebounding. So maybe XRP leads the way because they settle with the SEC, or the case goes in their favor, gives XRP the sole kind of regulatory clarity because they're in a case directly with XRP and Ripple. So if they win that case, then XRP's in the clear, as well as the entire cryptocurrency industry benefits. But there could be individual cases that may be treated as securities, but for the sake of XRP, it won't be because they already had a case. So maybe that's what happens, is that's the spark of the crypto market to get out of the woods here, that regulation clarity, and then XRP leads the way because it's the one that won the case. That could definitely be a scenario playing out behind the scenes right now before we even know, because XRP's already started to run. Then Ripple shovels 50 million XRP to an anonymous wallet. Here's what it means for the market. Right here, so Ripple, 50 million XRP. So 5 hours ago, as per the aforementioned source, the Ripple giant transferred 50 million XRP to a wallet that Whale Alert tagged as an anonymous one. 582 million XRP wired recently. So Whale Alert also tweeted that a total of 581.6 million XRP were transferred between exchanges. The largest transactions were two carrying 150 million tokens each. One of them was moved from an unknown wallet to FTX crypto trading giant. The other 150 million were sent by whales from Binance to Bittrex. Maybe it's because they're getting ready to list XRP back on the exchanges, right? That could be definitely a possibility. Then we have CFTC commissioner visits Ripple's offices as decision in SEC case looms. The outcome of the SEC versus Ripple lawsuit can influence whether the CFTC or SEC will play a greater role in handling the XRP token as a commodity or security. So Carolyn Pham, one of the 5 commissioners at the United States Commodity Futures Trading Commission, or CFTC, met with Ripple CEO Brad Garlinghouse ahead of a court decision that could affect how regulators handle XRP. In a Monday tweet, Pham said she visited Ripple Labs office as part of a learning tour involving crypto and blockchain. Garlinghouse later tweeted that the commissioner's visit was related to public-private engagement, likely referring to a privately funded company like Ripple engaging with U.S. regulators. All right, so let's keep going. So XRP triples funds inflows in 1 week, remains strong despite bear market. Despite poor fund flows into crypto-oriented products, XRP has seen a 3-fold increase in inflows, while the week before last saw a fund inflow of 100,000 into XRP-focused crypto products. This time it was already 300,000. So XRP remains one of the few cryptocurrency products that has continued to attract funds for the past 6 weeks, despite negative market dynamics and the ongoing lawsuit. With regulators' plans to have XRP recognized as security, the project continues to stay afloat. It's got that staying power, that's for sure. All right, so let's keep going. So the United Nations 100+ blockchain initiative bring together 100+ networks and platforms to form an ecosystem and to reach sustainable development goals. So that's kind of playing into what my video was about yesterday, but let's hear it.
Is to bring together 100+ networks and platforms to envisage a blockchain ecosystem and its situation room in support of the UN Charter Values and the Sustainable Development Goals.
And then Ripple signs the climate pledge, a commitment to reach net zero carbon emissions by 2040. And then keep in mind, I forgot to mention yesterday, the Crypto Climate Accord. They joined that back in 2020, I believe. So they're all up in this. And then the Caribbean, Central America, we're gonna move past that. So this is the Chalk and money flow breakout in July 2022. According to the previous CMF breakout price action, after the breakout, BTC retraced back to restore the power. When the power is enough, a huge rally comes. So we're in the restore period, I believe. So you have a breakout out of the trend line. You come back down to kind of get that juice back in the engine, and then you rip up. So I believe we're in the restore period right here. Just like how we found our bottom, we went up, formed a falling wedge, and then went. We went down, went up, falling wedge, went. So that's what I believe. And then this was an ad out of Forbes, digitalizing buildings. It's time to catch up. So I found this interesting. So greater energy efficiency, operational efficiency, and resilience. The many benefits of digital buildings have long been proven. Nevertheless, the building sector is lagging in terms of digitalization. Explains why this is about to change. So today, building owners and operators face a variety of challenges. There is increasing pressure to lower operating and energy costs. Decarbonization targets are tightening, and building occupants are increasingly demanding safer, more comfortable, and healthier environments. Digital services and solutions are rapidly becoming an imperative for building operators to meet these demands and manage infrastructure intelligently. They make it possible to transform infrastructure by reducing energy and operating costs, etc. So with digitalization, one business case becomes many. Let's see. So, but with anything as a service approach, infrastructure operators have an alternative option. Today, customers can pay for the outcome of the technology. Instead of investing heavily in equipment, customers have the option of purchasing efficiency, flexibility, safety. So basically, everything's getting digitized. That's basically what the moral of the story is. And the narrative is what they laid out here. And this is for like all industries: lower operating and energy costs, decarbonize, green finance, as well as safer, more comfortable, healthier environments people are looking for. So here's another chart. So all cryptos follow. Bulls go up to the stairs and bears go out the window, except for XRP. When bulls go up the rocket, bears go down the stairs. Yeah, that's true. When XRP goes, it just is a straight line up. when it goes down, it's a staircase down and it's not fun. So these are the extension levels. So the Fibonacci extensions, you grab from that top to that bottom, we pull it out. You got $3.59, $9.47, 15 and 72 cents, and then $32. $32 was perfectly in line with that 80x and 80 days video that I did as well too. So that the numbers are there. Then let's keep moving. So huge news, absolutely huge. The NASDAQ has been plotting a move into institutional crypto custody services. According to several people briefed by the company, the firm is waiting for a green light from regulators. Firm is also launching a new crypto-focused division, NASDAQ Digital Assets. So NASDAQ is preparing to launch a institutional crypto custody service. We're talking about the stock market, guys. Like, we had the DTCC, now we have the NASDAQ. I believe we have the New York Stock Exchange on board as well too. So NASDAQ has been plotting a move. Equity exchange operator NASDAQ has been plotting a move into the institutional crypto custody service. The firm, which operates markets in U.S. and global equities, is no stranger to the cryptocurrency market, having served as a provider of market surveillance technology to cryptocurrency exchange venues since at least 2018. So they're going all in on this. So an announcement released after publication said the unit's launch underpins NASDAQ's ambition to advance and help facilitate broader institutional participation in digital assets by providing trusted and institutional-grade solutions focused on enhanced custody, liquidity, and integrity. So what we're seeing here is prices are down. We're seeing everybody, or at least like retail, staying away from crypto. They don't want to touch it. Meanwhile, you have these huge institutions and huge traditional exchanges being set up as we speak. Just the other day we had Fidelity, Charles Schwab, Citadel Securities, and I believe there was another one in there, I think Citigroup, launching a crypto exchange in together. They're doing a joint crypto exchange. Now you have the NASDAQ involved. You have the New York Stock Exchange has backed their crypto exchange. So you have all these avenues for institutional money, which is trillions and trillions of money to flow in. And then you have retail able to buy in as well too. And then don't forget about BlackRock partnering with Coinbase. But then you have retail that's going to be able to buy crypto straight from their brokerage accounts. You have Fidelity going live with retail crypto offerings. It was only available to institutional investors before. I remember telling you guys all this back a year ago and saying that we need to beat them to the punch to it. And they're getting ready to unveil it to retail. So we have all the stars aligning as far as a huge flood of money being able to be onboarded into this market, which are going to shoot the prices sky high. So welcome NASDAQ to crypto. NASDAQ to launch institutional Bitcoin crypto custody services. We just heard that. So this is from Uphold. Is XRP a security? We could soon find out. The SEC and Ripple both asked the judge to expedite a resolution of the dispute. A decision could come within weeks. Sure hope so. Then utility takeover, so XRP, Stellar, Algo, like these are the ones that are up, and it just makes sense going into the certain events that are happening over the coming months. So End is here. Called Jerry Williams, my trusted gold and silver dealer. He said, I can't get gold or silver coins. The mint will not sell me anymore. To me, this means the end of fake money is here. As stated in an earlier tweet, silver going to $100, $500, get some, protect yourself. Yeah, so precious metals are good to own too, especially silver. But is Bitcoin in danger of losing the digital gold store value narrative? So Bitcoin is supposed to be our future-proof money, but the digital gold has been showing signs of corrosion lately. Real gold never corrodes, which is why it was chosen as money in the first place. It was more durable than paper, clay, wood, more malleable, and rare than a stone. Digital gold is better than analog gold in most ways, but it faces stiffer competition. Instead of paper and stone, it has to compete with US dollars, Swiss francs, equities, real estate, other cryptos, and more. As BTC has recently underperformed much of that competition, it is increasingly feels in danger of losing the digital gold store value narrative. This is perhaps unsurprising, as even gold itself seems to be losing the gold narrative. Governments have been printing money faster than ever, the most fervent gold bugs could have imagined, and yet a bar of gold fetches no more US dollars today than it did 10 years ago. It may be that, as we now have so many investments to choose from, people simply prefer productive assets to hard assets, which is understandable. Will Bitcoin be the world's reserve currency in 20 years? I don't know. I think we know what might, though. And then Putin's address to the nation delayed. So Wednesday. So I think today Putin's doing like a big address to the nation. So I wonder what that's going to be. And then this is the commissioner that met up with Ripple yesterday. So she said, I'll be speaking at the New York Climate Week Blockchain Summit today on sustainability, carbon markets, remember Zanj, and then public policy and Web3. So this is all happening. It's all going down. It's all the same stuff. And we're gearing up. And then we have Tether must produce undoubtedly important documents to prove what backs USDT, a judge said. So this, we've been saying about Tether, stay away from it. So U.S. judge orders Tether to prove what backs it. So a judge has ordered Tether to prove what backs a stablecoin as part of a market manipulation lawsuit alleging that USDT artificially inflated crypto prices. So this is what's going down. And then I believe there was something that tied in with that. I believe it's in my favorites. So we have China's central bank to enlarge the area covered by the digital yuan trial. So China to expand digital yuan testing in pilot cities to provinces, provincial level now. China's central bank intends to enlarge the area covered by trials of its digital yuan currency in 4 regions of the country. A top representative of the Monetary Authority announced the move while highlighting that the People's Bank has been stepping up digitalization efforts this year. So now they're expanding, and he says he noted that the authority has outlined the country's financial technology development for the period until 2025. He urged for widening of the array of use case scenarios for China's central bank digital currency. He also called for improving the integration between the digital yuan system and traditional tools for electronic payment to increase convenience for users of the digital yuan platform. So more developments in the CBDC space. And then we have world leaders gathered in person at the 77th United Nations General Assembly in New York City. French President Emmanuel Macron used the occasion to warn nations that Russia's invasion of Ukraine was dividing the world and restoring the age of colonialism. And then a new Forbes analysis of 157 crypto exchanges find that 51% of the daily Bitcoin trading volume being reported is likely bogus. More than half of all Bitcoin trades are fake. So when there's no utility, and then stuff like this can happen. But when you have something like XRP that is used for the cross-currency conversion, you can't fake that. You got institutions using XRP as that bridge currency to settle, say, like $1 to the euro, right? So that demand is going to be there. That liquidity will be there. As far as Bitcoin being a digital store of value, a digital gold, people don't like to spend that, right? So there's not much trading of it. So then you have these kind of exchanges faking wash trading and everything like that. Then we have this out of the BIS. I haven't listened to it yet, but let's just hear it real quick.
Policymakers are engaged in a tough battle against tenacious inflation. Liquidity stresses in the European electricity market serve as a salutary reminder of the challenges of shielding the real economy from financial shocks.
You're listening to Business, the podcast from the Bank for International Settlements.
Liquidity. It's topic of town. So you have commodity markets, foreign exchange, monetary policy, green finance, bond markets, housing market, corporate bonds. Climate-related taxes, straight out of the ECB earlier, climate-related taxes and spending represent only a small part of the euro area government's budgets. Countries have set ambitious targets, but more measures are needed to mitigate the impact of climate change and reach net zero by 2050. Maybe it's through the IMF climate coin and pegging, this new stable coin to a ton of CO2. They're saying it's going to be labeled at $100. They're going to fix the price, kind of like the gold when Bretton Woods. They fixed the price of gold. They're going to use carbon as this new kind of gold standard. And then we have this out of Stellar. So we're proud to share the official findings from the PwC's Blockchain Sustainability Report. The research between Stellar and PwC measures the environmental impact of blockchain technology. So I'll pull that up. And then I'm going to go back here to see what other things are here. Every bank in Japan will use Ripple's XRP by 2025. From Yoshitaka Kitao, the CEO of SBI Holdings, a Japanese financial institution generating over $200 billion in revenue. That guy, SBI, He actually owns, like, I believe 10% of Ripple and 10% of R3, and he's been mostly in charge of kind of pairing them together to use XRP within R3 systems. So every bank in Japan using Ripple's XRP by 2025. And then we have, all this talk about the climate. So we're committed to restoring 100 million trees by 2025. This is MasterCard. So maybe it's because of Climate Week. But major crypto trader Wintermute hit by a $160 million hack. Keep those cryptos on a ledger, or at least your long-term holdings. NASDAQ is launching a digital assets division's proprietary custody solution. Also intends to offer liquidity plus execution services. India seeks a phased implementation of the digital rupee, a central bank digital currency, during this fiscal year, the deputy central bank chief says. And then the Indian government is planning to finalize its stance on the legality of crypto in Q1 2023 in order to become FATF compliant. And then Tether, we know about Tether. U.S. government may ban algorithmic stablecoins. So ticked off by Terra's algorithmic stablecoin UST, and an array of similar assets were seen temporarily losing their peg. So they're looking to put a ban on them. I don't blame them. And then you got U.S. House proposes 2-year ban. Yep, right there. CBDC is another new forms of digital money. Goodbye privacy and anonymity. You have cash is declining as we continue to delve into the design principles and attributes of new forms of digital money. There is one topic that has repeatedly raised its head as a core discussion point for many, an essential feature: privacy. Then the era of global central bank may have arrived. From Bloomberg. Let's see what this is. So there's a striking harmony to interest rate hikes. Togetherness may succeed in quelling inflation, but deepen the consequent downturn. The hazards of keeping up with the Joneses. See, Forbes or Bloomberg, these always do this. Let me see if I can find one where I can get it. Here we go. And I don't see anything that's that important in here. So let's go to the Stellar article. So since its launch, the Stellar network has processed billions of operations and millions of payments, reflecting real demand for blockchain technology from fintechs, financial institutions, and developers around the world. If blockchain will help power a more inclusive, equitable future of finance, it is critical that the underlying technology is also sustainable. Sustainability and efficiency are integral to Stellar by design. Via the Stellar Consensus Protocol, a low-energy consensus mechanism achieved through proof of agreement, the Stellar network is designed to connect financial systems so they can work together seamlessly. So IMF and KPMG concluding 2022, the institutions are mainly going for permission networks, Corda, and Hyperledger. So that's why we look at these consortiums, because we know which cryptos are partnered in a part of these consortiums, Hyperledger and Corda, and there's only a small few. And then the IMF calls on international financial regulators to develop a global regulatory framework for crypto. Let's look into this. This will be the last one. So crypto needs global regulatory framework. The longer it takes international regulators to form a game plan for regulating crypto, the more likely it is that the regulation will be locked in at a fragmented national level, warned the IMF on Tuesday. They're saying in a blog post, the deputy director wrote that a global framework would bring order to the markets, help instill consumer confidence, lay out the limits of what is permissible, and provide a safe space for useful innovation to continue. He argued the absence of a coordinated global response to the crypto boom has given way too fragmented national level regulation that leads to regulatory arbitrage as crypto actors migrate to the friendliest jurisdictions with the least regulatory rigor while remaining accessible to anyone with internet access. The IMF has stressed that a global response must be done sooner rather than later to avoid national regulators from being locked into differing regulatory frameworks. Sooner rather than later, you can feel it. There it is. So that's it, guys. That's the newsletter. And if I find anything else, I'll just retweet it into the Discord, and I'll be doing a market update.